All right, guys, back to work. What a fantastic day today. You know, it wasn't easy, but if you followed the game plan from last night, plenty of buy the dip, bear trap opportunities this morning. Had a fantastic day. Hope you guys made some money as well. But it's time to get back to work tonight. The markets are reversing off the highs. A semiconductor sucker punch this morning off of surprise earnings. And boy, do we have a lot to talk about in a very important video, because this big reversal off the high is actually pretty good for us traders tomorrow, because now we have two-sided markets, and that just means more trading opportunities on our radar. I have a ton of trades I'm tracking here for tomorrow. Two-sided markets that we have right now on the Emini and the Nasdaq are pretty easy to trade. I'm going to give you guys a game plan in the video here tonight. By the end of this video, you'll have a game plan to make some money on Friday. Before we jump in though and get the game going tonight, make sure you subscribe to our channel that we don't miss tomorrow night's video. And if you enjoy these videos tonight, do me a favor, as always, hit that like button. Give me a shout out down in the comment section below. Thank you so much for sticking around. I know a bit late, but enough of the intro, Joe. Let's get ready for Friday. There are a lot of great trades setting up here for an OpX Friday. Now, remember, we're starting off tonight on the 60-minute charts on the S&P and SPY and the Nasdaq and the QQQs. I like to use the 60-minute charts to help me plan my trades the following day. And then later on in the video tonight, we'll drill down to some tick charts and we'll talk about my favorite entry setups to time the perfect entries tomorrow morning. What's the biggest clue we have right now? Well, you'll notice the S&P and the Nasdaq are two very different markets right now. The S&P is still a very bullish market right now. We basically have a bull market into a trading range. Ranges act like magnets, and we are sitting right on key areas of support below that trading range. So all things equal right now, buyers will likely be looking at this as a buy the dip moment and be looking for ways to buy back up into that trading range. That's a pretty easy one on the S&P, and we'll talk about how to capitalize on these key support levels here in a moment. But the S&P is very different than NASDAQ, right? NASDAQ makes that big collapse after that semiconductor sucker punch from the earnings that came out this morning. Now, on the NASDAQ, we're still an overall bull market, but this is a very, very sharp running lower. We have a very big move lower down right now, and this two-sided chart we see on the 60-minute, it clearly tells us that we should expect a pullback and a retest of that low. This gives both the buyers opportunity to buy double bottoms, to buy reversals. It also gives the sellers an opportunity here to short some bounces here right now. So there are plenty of great trades in the NASDAQ. Now, before we drill down and talk about my favorite trades here for Friday, let's go take a look at the schedule for tomorrow. Tomorrow is a Friday morning. It's a summertime Friday. It's OpX. There's no major news for tomorrow. And what that usually means is volume will likely be a bit lower, which means the window of opportunity tomorrow will likely be quite a bit smaller. My mindset on a Friday morning is get into trades early and then try to leave an open position into lunch, into the afternoon. It's early in and then leave a runner into lunch, into the afternoons. Summertime Friday, you have to think the volume will dry up 11:30, 12 o'clock. Liquidity will dry up in the afternoon. So remember, trading is like riding a bicycle. It's much easier when it's moving. So anticipate volume to be a bit lower tomorrow, summertime Friday, OpX Friday. No major earnings reports now until next week's peak week. So keep that mindset tomorrow. Into something early, take some profit, get rid of the risk, but leave a little piece of that position, because Fridays, they love to run, right? So no major news, OpX Friday. All right, that's the mindset for tomorrow. Now, back to our charts, because the money is made on the charts. Why don't we go now and talk about my favorite trades here on the S&P and SPY first, and then we'll move over to the Nasdaq. These are quite different markets, but I think you'll find that the game plan will be similar with some small tweaks here. Now, like I mentioned before, the S&P is still pretty much a bull market right now, right? We're bullish into a trading range, and we have to anticipate that buyers are probably going to see this as a chance to reload the gun run and go back up into that trading range. The challenge, though, is not only do we have the Nasdaq that may, right, that Nasdaq is so bearish right now in the short term, it may lead to some heaviness on the S&P, right? The S&P may not be able to bounce as fast as it normally does, right, because of the Nasdaq. Also, too, let's go look at the tick chart. Remember, everything is easier. We trade off of tick charts in our trade room. This is a 7,000 tick chart. You'll notice in the upper left-hand corner, this is the 21 EMA. If you're watching here for the first time, you'll notice right now on the tick chart, the day began in a trading range. And like I mentioned before, if you were with us this morning in the trade room, we had no problems finding some bear traps off of that low. It didn't give us that big squeeze we would have all loved, but you know, you take whatever the market can give you. We had kind of an extreme situation with those earnings reports coming out this morning. There's always plenty of surprises during earnings season. But now I want you to think about who has control of momentum on this faster time frame, this tick chart. This is all bears, right? These are all bears here right now. Now, anytime we see a real strong move in one direction like this, what do we expect? We expect a pullback and a retest of that low. At that point now, because we're an overall bull market, we would definitely expect buyers to be coming in and looking for those double bottom reversals that we love so much in our trade room. So if you anticipate that sellers are going to come in and try to sell this, I'm not that interested in shorting on the S&P. On the Nasdaq, I definitely think there are some short side trades worth considering here for tomorrow. But I want you to think about the situation right now. We are overall bullish, but we're concerned that the higher we go, right? The higher we go, who's waiting up here? Bears are probably waiting up here to send this thing right back down. So now, if you're a student of mine, or if you've taken my free trading classes yet, you probably know the best setup I'm going to talk about. What is the best way to buy an overall bull market, but buy as low as we can? Right? It's very simple. It's a bear trap. It's ultimately what we call a crown reversal pattern. Inside the free trading course, you guys are learning about two patterns right now, failures and traps, right? These are two of my favorite setups I teach in our free trading classes. If you were to wrap together a failure and a trap pattern, you're going to get what I call a crown reversal. Now, these are very, very simple patterns, but make sure you learn how they look. First of all, as we start going higher, the bears will come in, try once. The bears will come in, try twice. Okay, notice higher highs, right? Higher highs in price. You need higher highs in price, and then that gives you the bear trap. This one right there, right? We run lower, bears come up, they try once, they try twice. There is the crown reversal. There's the bear trap. On a faster time frame, by the way, that was a very nice winner. I know a lot of you guys made money on that this morning. But anyways, this pattern right there, that pattern is the key to unlocking the winning trades tomorrow for the buyers. Now, there can be a lot of ways we can use that pattern, right? For example, as we go higher and we anticipate bears are coming in and trying to short this thing back down to retest the low, as we're going higher, we don't want to buy high right now because we have to expect who's waiting up there. Bears want to buy as low as we can. That way, if we do see bears coming in right over at these trend lines, over at key areas of resistance, if we do get whacked back down, at least we're already well in the green. We're taking half off at that high. Stock moves up to get rid of the risk. The goal of the buyers tomorrow will be to use these crown reversals. For example, if we do head back to the highs and then retest that low, these are where they really, really work well. Once we retest that low, bears come in, they try once, bears come in, they try twice. Again, one try, two try, higher highs in price, get underneath that low. look for that nice, strong, juicy signal. I got a lot of emails this week. You guys nailing these bear traps today, just like I teach these in that free trading course, right? Again, call them crown reversals, call them failures with traps, whatever you want to call them. These are the patterns. Now, again, the mindset tomorrow will be to get into one of these, and we never know which one will be the one that really rips, right, and runs in the opposite direction, because, again, we're still in overall bull market. Now, we'll be talking a lot about traps throughout the rest of the video here tonight. If you haven't taken my free classes yet, I teach all these setups inside the free trading course. What I'll do is, if you're not making consistent money with this stuff right now, I'll put a pop-up there for you for our free trading classes. Grab that little link that popped up there. Take that free trading course, because not only will you learn all my favorite entry patterns, traps, failures, pullback setups, most importantly, I'll teach you a simple trick that we use every morning in our trade room to know exactly where the best winning trades are going to be each day. If you're tired of losing money, if you're missing too many good trades right now, grab that link that popped up there. Take that free class. There are hundreds, probably at least hundreds, right, of examples of bear traps and crown reversals inside the archives in there. And also, don't forget, I'll put all the important links you guys need down in the description of the YouTube video in case you can't grab that pop-up. All right, guys? Now, one more thing, one kind of variation I want to go over here right now is, let's say, for example, we do get this market now popping higher, right? The bears will come in and they're going to try to take this thing going lower. Okay, the biggest challenge tomorrow will be if we start to accelerate and run higher. We don't want to chase this thing going higher. I can't repeat that enough right now. If there's one rule we probably won't want to break tomorrow, obviously, who knows what's going to happen tomorrow, right? But from what we know right now, if there's one rule we don't want to break tomorrow, we do not want to be buying high, right? Because all that momentum will want to take this thing back going lower. So if this thing starts to accelerate and run higher, the goal will be to keep looking for that same bear trap pattern. All right, I know it's very basic. I know I usually cover a lot more setups in these videos, but there really is one core setup I'm looking for tomorrow, and that's bear traps. Remember, as we go higher, right, higher high in price, trap below that low, good strong signal, and we're trying to go back up into that range up overhead. A very, very easy game plan on the S&P here for tomorrow. Now, that's the easy part. Let's now go over to the Nasdaq here, and let's talk more about Nasdaq, because Nasdaq is obviously quite a different animal. Looking for bear traps. We're still very much a bull market here on the S&P. The Nasdaq, we're definitely not a full-blown bear market yet. There's no question about that, right? Until we can actually break and kind of hold below these prior highs here, this is likely, we will likely look back on this a week or so from now, right, and see this thing running right back up and retesting that high. However, the odds of that happening in the short term are relatively low. Now, given this move down today was kind of a sucker punch from those semiconductor earnings, so this could evaporate tomorrow, right, and rip back up, but the odds are not very good for that. What is better odds right now is that as this thing pulls back right now, the bears are going to throw everything they have at this thing and try to get it to retest that low. So my job as a buyer for tomorrow will be to, again, buy as low as I can. Now, let's go back to our tick chart here, because there's a very small but very important difference here on the Nasdaq. The Nasdaq didn't just make a strong move down today, it made a very big move down today. Now, if you watch these videos every evening, you know this. What do we always look for after we see a really big move in one direction? Well, what's the problem? The problem is a big move. Nobody wants to buy low, right? We don't want to buy, right? Sorry. Nobody wants to sell high. Starts a Thursday night, right? Busy week here. Busy week. Nobody wants to sell low, right? Let me rephrase that here. Get my act together here, Joe, right? So big move down. Nobody wants to sell low down here. So whenever we see a big move like this, we anticipate what we call a two-legged correction. Okay? Two-leg corrections are usually a little bit bigger than a measured move, right? Measured moves, of course, we talk about those in the free trading course. So we have to think there's a lot of bears waiting up around this area, right, to short this thing back down again. Okay, now on the S&P, we talked about how being a buyer on the way higher could be using what we call a bear trap, right? Now, the one difference about this market is we're a lot more bearish. So in this situation, when I think about buying during that pullback in the Nasdaq, this is a much lower probability trade, which means these are going to be half-size positions. These would be quarter-size positions, right? These are much smaller positions. Remember, we anticipate anytime we see a strong move down like this, we anticipate bears coming in, whacking it, and retesting that low. Once they retest the low, now mission accomplished, and now we can get a lot more aggressive with bigger size positions, full size positions, now trying to buy off of that low. So the one key difference between the S&P and Nasdaq is the S&P is still pretty bullish overall. I can use pretty much full size positions. I'm going to be a buyer with those bear traps. Okay, the big difference in the Nasdaq is all of that momentum. The odds of this thing just ripping back higher here are not very good. Could it happen? Of course it could happen, right? This is all based on a big earnings miss, right? So of course it could happen. It could easily happen. But right now, though, we know right now we have to respect those bears and realize that there's a lower probability of that reversal off the low right there. Now, I love that double bottom reversal. That double bottom reversal, that's much more attractive as we go because now we've already retested that low, right? Now the bears have already emptied the clip at that point. They've spent their bullets at that point. Okay, that's one key difference between the Nasdaq and the S&P. Now, how would I sell this market? What's the best way now to sell this? This one's pretty easy. Inside the free trading class, we talk about a failure into pullback combination. We want to get that two-legged correction. Okay, now, this is a 5,000 tick chart. Okay, we'll trade off a 1,000 tick chart, right, tomorrow morning. Much faster time frame. On the faster time frame, this will feel very bullish. And what we'll do is hopefully we'll get some buyers to come in and try to buy up here. Now, is that a good place to be a buyer? Certainly not. Why? Because of all that momentum, they're going to try to pop it up and retest that low. What I could do is if they start to accelerate and go higher, now I can be a buyer. But again, we have to buy what? As low as we can. Okay, that variation can also work on the S&P as well. Okay, what is more likely to happen though is as we make our way up into prior swing lows, as we make our way up into key areas of resistance here overhead, the rookie buyers, the folks who are not watching these videos, they're going to see this thing going higher, think it's a reversal, they'll try a couple times, and bears will probably be waiting right there to eat their lunch with what we call a failure into pullback combination for a retest of that low. All right. So again, this is that failure pattern you guys are learning in the free class. Again, it's a two-try failure because again, on these two-legged pullbacks, these can be pretty sharp, right? They can feel very bullish. So give those buyers a couple shots. Think about where their pain is. Think about where their stops are. Sell right into their stops. Failure pattern. And then on the way back down to that low, we look for that first pullback off the moving average. The goal is to go back and retest that low. All right, guys? Now again, remember, the big difference here is on the way up, if you're buying that bear trap, it's smaller positions. On the way down, once we retest that low, now let's get those bears trying here again. And that same, again, this is a very simple game plan for tomorrow. If you want to be a buyer, buy the bear traps. Okay, it's a very simple game plan here for tomorrow. Okay, so this is the vision I have here for tomorrow. The only variable really is as they pull back, do they keep on accelerating? And if they do, we then have to scramble now, right, and look for bear traps. But really nothing changes. Every single buy setup right now, we are looking to buy as low as we can to protect ourselves. And again, the idea here is eventually one of those bear traps will end up being that big rip. We just don't know which one or when it will be here tomorrow morning. Now, I want to go over one more scenario because anytime we see a big move like this, a range, we have to anticipate ranges down here. It's a summertime Friday tomorrow, OPEX Friday. Okay. Now, in all reality, if we see a trading range down here, and this also goes for the S&P as well, this is a gift to the buyers, all right? If we see a range down here, this is one of the easiest ways to get long on this because ranges act like magnets. On the 60-minute chart, you'll see a lot more support levels are waiting right below that trading range. And ultimately, it's the same basic pattern. The difference is, if we get below that trading range, that range becomes a magnet. And so oftentimes what will happen is we'll kind of fake out, break out below that trading range. The bears will come in, they'll get caught shorting here, and we can use that again, that two-try trap, that crown reversal pattern, and buy that sucker back up again. These types of reversals, these love to rip because the amount we go below the range will oftentimes be projected back above the range. Targets come off at the high of that range. Targets come off at the pendulum on the side. We have a lot of examples of these types of range reversals in that free trading course. All right. So if we go sideways here tomorrow, the best way to buy it is going to be underneath that trading range because ranges act like magnets. And again, this exact same setup will be very, very effective on the S&P as well. The more difficult part here will be if we go sideways into a trading range and we go higher, right? If we go higher, we really have to be careful if you're a buyer, all right? Because now that trading range is going to want to drag this thing right back down into that range. The same basic principles apply, right? As we go higher here, we're hoping there are a lot of rookie buyers out there that don't watch this video. They're going to start buying right into resistance, and I would love to use their stops with a failure pattern to short back down into that trading range, right? And be aware the same thing applies. The amount above the range can now be projected below the trading range. That becomes support. Once we take out that support, what do you think is the best way to buy down there? You know this already. It's that same 1, 2. Like I said, if you want to be a buyer today, there's pretty much one entry pattern you need to learn, a two-try failure with a bear trap entry to buy as low as you can. That will keep us out of trouble tomorrow. And again, eventually one of those setups could potentially be one of the biggest winners of the week if it starts to squeeze on a Friday afternoon. How would I trade a reversal on this? What would happen, okay, if we end up popping up here like this? What would it look like for a buyer right here? The buyers have to come in, hold the pullback, and jump off that moving average. Okay, we call these 1, 2, 3. Okay, the other variation of this is it pops and begins to grind and grind and grind. Okay, the bottom line is be very careful once again trying to buy into that high up here. If they pop and begin to grind higher, these are pretty easy. I can mark off that high. I can mark off that low. And again, you know the answer to this. Look left, find swings, and look for those bear traps. You're buying below prior swings off the low of that channel. That is the key if we do end up popping up and keep going, right? Remember, the higher we go, right? The higher we go, who's waiting up there? Bears. We have to be very careful going up and getting whacked right back down again. So we're going to buy as low as you can, and we'll keep on trying to pick those bear traps here, right? And try to see if we can get one of them to run. Again, though, up, trap those buyers in, back down to retest the low. Once we get back to retest the low, trap the bears in, right? Bear trap and buying off that low. That dance is the key to success tomorrow, most likely on the Nasdaq. And obviously we had a bit of a curveball thrown our way here this morning. I'm sure tomorrow, OPEX Friday, I'm sure will give us another curveball tomorrow morning as well. That's exactly why we have our trade each morning. Every morning we get together and we trade this stuff together, 8 o'clock Eastern time with all the members. It is a fantastic place to come out and learn this stuff and trade it along with us. I'll put all the membership links. I'll put all the free class links. Everything we talked about tonight, I'll put all the details in the description of the video. If you need help getting access to anything we've talked about so far tonight, please don't be afraid to call the office or use live chat. We're always here standing by to answer the call, give you some help if you have questions along the way. Guys, hope you enjoyed the video tonight. Great job today. Tomorrow, a two-sided market. Remember, buy as low as you can tomorrow. Be very careful as it goes higher. And we'll see how much the Nasdaq drags this S&P or holds down the S&P. Tomorrow is sure to be a very busy day tomorrow to finish up the week. All right, guys, I'm going to wrap up for now. Thank you so much for sticking around tonight. Oh, I know it was late, so be well, be nice to each other, and be here next time. Adios, amigos. Bye-bye for now.